So in today's video we're going to look at market structure, and we have two different types of market structures. We have the basic one, which is on your screen right now, and then we have the advanced one, which is another advanced version of this very one. So for you to understand the advanced one, you need to first pay attention to the basic one. So if you stick around in this video, we're going to pass through this real quick and we shall extend our knowledge to the advanced one. So in the basic market structure, as you can see, you need to first understand where is the market heading. Where is the market heading? And in understanding where is the market heading, let's take this example here. If you see the market doing something like this, what does this show to you? Is that the market is heading to the upside, or we can call it an uptrend. But basically, if I'm using market structure, I'll only look at these parts. We have these parts that we call structure points. This is the high and this is the low. So whenever I'm looking at market structure, the basic market structure way, I'll look for these structure points in order for me to understand where is the market heading. So in this scenario, the market is clearly bullish. Why? Because I can see from these structures that the previous high was taken out by this low in order for it to form the next new high. And what did this high do? It also tried to put on a pullback that later on formed another higher low. Okay, and what did this higher low do? Broke the previous high and then got us a new high, which we call a higher high. A higher high. And then what happened again? This higher high gave us this pullback that came back to give us a new higher low. Why do we keep calling these lows higher? Because they never go below the previous lows. As you can see, they never go below the previous lows, so they are higher than the previous. And why do we call these highs higher highs? Because they overtake the high, the previous highs. This was the high before, this one took it out, now this is the new higher high, and then it was taken out by this, and then this is the new higher high. So this is what we call market structure. But for you to understand market structure very well, we need these structure points. You need to understand which structure, what move brought in the structure point here, and which move brought in this structure point here, and which move brought in this one here, and which one brought in this one here. So in simple terms, for those people who know how trends move, we always have this impulsive move that gives us a pullback, followed by an impulsive move, pullback, impulsive move, pullback, impulsive move. So as you can see here, this is just a repetition of the basic market structure. What are you seeing right now on your screen? This is the basic market structure. We shall always have the impulsive move, followed by the pullback, and then another impulsive move, another pullback, another impulsive move. So as you can see, it's just a repetition. Whenever you say trend, it's just a repetition of this basic market structure. Okay, so let's get to it. All right, again, ladies and gentlemen, now that you understand the basic market structure parts, why don't we just go to this? Okay, let me just take you through the parts that I meant. We shall always have this impulsive move that will later on give us a pullback, and later on give us another impulsive move that will lead to a pullback, then later on give us another impulsive move that will lead to a pullback, so on and so on. So basically what you're seeing here is just this first thing here. See, from that impulsive move to the high, to the low, to the next impulsive move, and we just cut it from here, because we know that this is the very thing that's going to repeat itself in the near future. So we have to pay more focus to this first part here, because we know that this very thing is going to happen here, this very structure is going to happen here, hence forming an uptrend. Okay, so let's get back to market structure. So what's the importance of this market structure? Number one, if you know how to map very well your market structure, you will always find yourself on the right side. Most of the times you will be on the right side of the market. If it's a buy, you always find yourself buying. So that's the basic thing we need. Okay, and then number two, why do we really need market structure? Because market structure is the basis of everything, is the basis of how the market moves. It's literally the starting point. And once you're not on the side of market structure, you get yourself into problems. Okay, so whichever strategy you're using, you will need to have market structure. Market structure is king of all strategies, and if you have that strategy that doesn't follow market structure, I know for sure you'll have multiple losses.